Down payment, closing costs, are they the same thing? If you are a buyer, if you are a seller, and you ever wondered what in the world are closing costs, because I thought that it was the same as my down payment. Well, this is the episode for you. Today, we're going to unpack, the details of closing costs and maybe give you guys some strategies on how you can navigate in this real estate market. So, guys, let's jump right in on this Teach Me Tuesday on a little bit of a chilly, cold February day today. So let's talk about closing costs, guys. I'm LaShawn Abraham, and I'm definitely excited to talk to you guys about this. I think it's been a while since we kind of dove into closing costs. So let's get started. So when it comes to closing costs, I think it's one of those topics where if you're a buyer, it can be confusing. And then sometimes I also feel like if you're a seller, it can be a little bit misunderstood. So let's kind of just do a deep dive in what are they and how much closing costs do a person need. I think on average, I've heard that, the good rule of thumb is I would say 3%. What do you think, fellas?
Yeah, I think 3%, but just to be on that cautious side, 4% would always should always get you in that sweet spot.
Right. That's kind of what I go by, guys. I try to go 4%. If it's less, great, but I just don't want to catch the buyer off guard if in fact it is higher than that 3%. So I do try to aim for 4% when I'm possibly negotiating closing costs for my buyer in the transaction. So yeah.
So, I mean, with that being said, Wilmot, do you see that? I guess it's kind of a two-part question. Do you see that sellers are a little bit more forthcoming now to give closing costs, or do you think it's more price point driven, whether they'll give the closing costs at that 3 or 4% range?
Depends on the property. All right. Depends on the situation. So, motivated seller, yes, they are more negotiable when it comes to closing costs, willing to negotiate price point with closing costs. I'm seeing more of that these days. But if it's a very desirable property,
Hmm.
okay. I recently listed a property and we had multiple offers. And one of the things that the seller went with when they selected an offer was not paying closing costs on one of them because one of them took away. Seller paid closing costs. Okay, so just
See.
depends on the property and the scenario. Yeah.
So you said two terms, and just for our audience, I want to kind of break that out. What does that mean? What is a motivated seller? I'm motivated. I want
Mm.
to sell, but what does that look like in actionable,
Right,
actionable.
right. So for instance, let's say a property has been sitting on the market for a while, right? And
You said, wow, like a week, 2 weeks, a year. What's a while?
well, let's say a couple months. Let's say
Okay.
2-3 months, right? It's been active, and you might have even seen. Hey, there's some tips for you guys out there looking at properties. Okay, if you're out there on Zillow or Realtor.com and you're looking at properties, they're on the market 30 days, 45 days, 60 days, and it's never been pending. Okay, and then also if you see, let's say that they have done some price drops as well. Okay, that's showing that the seller is probably more motivated now than they were before when they first listed the home to get the house sold because they're doing some price reductions. They may be even telling the agent to offer some incentives up front. Those are just some things that might show that the seller is motivated and
Hmm.
ready to sell. So
Well, good deal.
yeah.
And so Gavin, on the lending side, how would you kind of, if you had to, explain to a buyer what are closing costs, how would you kind of break that out for them?
I mean, yeah. So the kind of the grunt of the definition, like, is there are fees that are associated with finalizing your home purchase.
Mm,
And typically, I mean, we said 3 or 4%, but they can range anywhere from about 2 to 5%, in most cases. I mean, as far as like components, you may consider like maybe a loan origination fee in most um, traditional loan types. That's just a fee that's charged by your lender for processing the mortgage. So the lender has to get paid for the services that they're um, they're rendering. And then also you have like the appraisal and home inspection fees. These are required for loan approval and property evaluation. So somebody to come out and give you an evaluation on your home. Sometimes those things can be collected up front, or they can be included in your closing costs. It depends on the lender. You have title insurance and title search. What are those things? Well, title insurance protects owners from ownership disputes, from somebody saying, like let's say the home was sold, several years ago, and now you're purchasing it to become a new owner. You don't want somebody who had a interest in that home to be able to say, hey, by the way, I still have interest in it, even though this home has been sold multiple times. I still need to claim my interest. Well, because of that title insurance, it protects you. You still, that title insurance and also the title search to find out if there are any other lien holders or anything like that against it. It's just for your protection. Then you also got escrow and prepaid costs. Um, your escrows are like your property taxes, homeowners insurance, and then also prepaid interest. Property taxes, Uncle Sam has to get his always, and so we got to make sure that your property taxes are included in the escrow to where your lender will typically pay that at the end of the year for you when property taxes come due as you make your monthly mortgage payment. And then the homeowners insurance works the same way. It's typically paid in advance, and and
Well,
and
here's
then
here's my
lastly,
question. I'm sorry, I
okay,
didn't mean to cut you off.
no,
I mean, these are a lot of costs. Like, I mean, can I just like waive some of these costs? Like, I don't want all of these costs. Like, is these costs mandatory or required?
um, uh, in some situations, some cases, yes, absolutely, they are required if they're a part of your loan requirement. Um, and in some you can navigate to where you may not be required to, let's say, like for your appraisal, you know all lenders may not require that you use their appraiser, or for all loan programs you could possibly get your own appraisal done, and that may be acceptable. It's far and few in between. But for your traditional retail lenders, they're probably going to want to have an independent party do that appraiser for you.
Mm.
But yes, to answer the question, it's kind of yes and no. But LaShawn, how do you feel? What would you elaborate on that?
I mean, yeah, I mean, honestly, no. So these are the standard costs of doing business. I mean, the cost can be reduced when it comes to closing costs, but you can't just completely just say, I opt out of closing costs. I
Oh,
don't want to
correct.
pay them,
Yes.
right?
No closing
Um,
cost for me. No,
like
no,
I'm good on
nothing.
that. Yeah,
It's
y'all can
fine.
have that. No,
Yeah,
you
yeah.
can't. Unfortunately, you can't do that, right? Because this is the cost of doing business. And so we tell you these things, one, just so that you can prepare, because we think preparation is key as you get knowledge on what to look forward to. Now, Wilma, my question to you would be, like, I guess, how likely can you really negotiate these closing costs with the seller? Is there some, I know every situation is unique, but is there some, some strategy around trying to negotiate getting some of those costs covered from the seller?
Yeah, I mean, it really is, and this is very important because a lot of buyers don't know this, right? Like they just think this is the cost of the house. Now they might have watched some HGTV and
Mhm.
saw like, hey, yeah, let's get the seller pay some closing costs, but they don't
Hmm.
really know, like we talked about at the beginning, how much closing costs. I wish I knew that when I bought my house, right? Like, man, I didn't know it was this much closing costs involved. I probably would have asked for more, you know. So, but you're talking about 4%. Let's just use simple numbers. $100,000 house, if you can find it. All right, $100,000 house, 4%. That's 4 grand, guys. And then I just what I try to do with my buyers is also put them in the seller's shoes as well. Allow them to see it's like, okay, you asked for 4 grand. Okay. Um, if I would not advise making a low ball offer and asking for closing costs. If you need closing costs, let's consider coming up closer to what the seller is asking for and asking for that closing cost. I think that the seller would be more willing to accept your offer if
Mhm.
you're if you offer close to the price or at the asking price or what they're asking for, and asking for that, hey, that 3-4% closing costs for negotiation reasons.
I like that. I
So
like
Yeah.
that. Now, Gavin, I hear this one all the time. Can I just roll my closing costs into the loan? Can we do that?
mm,
Yeah,
mm,
no, unfortunately, you can't roll it into the loan. You cannot finance your closing costs. That's typically that's essentially what you're asking. Can I just you know put that on the back end of my loan? No, unfortunately not. These are costs that are required to close your loan, and they must be
mm.
collected before your loan can be funded.
But isn't there a way to kind of, I like to tell people because mortgage and real estate, it's not quite black and white, right? It's really a gray area. So they can't technically roll it into their cost. But, maybe if the house appraises for more, can we
Yeah,
offer
not
above the original
correct.
price?
Now
Right?
there are ways to circumvent things, and those are things where we get creative as lenders to make sure that for clients who may need some additional help with covering those costs. Yes, there are ways to make sure that all of your closing costs are covered by certain things like LaShawn was saying. If there's more equity or more value in the home, you can increase the purchase price. And what she's saying is, let's say you're buying it for 100,000, like Wilmot gave the example, but the seller didn't agree to give you any closing costs, and you don't really have it yourself to come to the table with 4% to cover your closing costs. Well, the home appraised for 105,000. So guess what? So that nobody loses out, you can increase that loan amount, that your purchase price to now 104, 105,000, and that seller gives you now a credit for that additional that you're increasing in the purchase price, and no one loses. You benefit from it because now you don't have to come to the table with $4,000, and they benefit from it because they lost no proceeds in the process.
Yeah, I like
Absolutely.
that. I like
Yeah.
that. But I always like to give my little disclaimer because I don't want people to take what we say and, take it completely 100% literal and be like, well, Gavin
Right.
said that I could do this. Now, you must qualify at this higher price point too. So I like to put that in
Correct.
there too. So you can't just go around saying, yeah, increase my loan amount so I can add in the closing costs. You also have to be eligible to qualify at the higher price point too, as well. All
Mhm.
right. So our last little one I'm going to ask before we wrap up for today is there a difference, Wilmot, between the closing cost that a buyer pays versus the closing cost that a seller pays?
Absolutely. So, and I guess what I want to clarify is also, there's a term in real estate called transaction costs. Okay.
Yeah.
Mhm.
And closing costs. And I'm gonna explain the difference. Transaction costs, these are the total expenses associated with buying or selling a property, including closing costs, but also broader financial considerations. Okay, so like it's all of the costs. All right, the total cost, the total expenses in the transaction. But like closing costs, it's a subset of the transaction costs. All right. There's some specific things for buyers, specific things for sellers. Just to, just to go into some of them. So for instance, well, this one is a little this one is different now. I would say
I know you want to talk
commissions.
commission.
I would
Mm-hmm.
say commissions, right? So commissions now with the new laws, buyers can pay their agent a commission. Okay, they could before. Okay, and let me stress that they could before, but it was almost assumed. It was always assumed that the seller was always gonna pay for commissions. That's a type of closing costs or transaction costs. Okay. Um, Also, home repairs and staging, that's something that the seller normally does, repairs, okay, of the home. Also, any mortgage payoffs or prepayment penalties, those are typically done by the seller. If they own that property and they had a mortgage on it, they have to pay off the mortgage in order to move forward with the sale of the property. And then also, transfer taxes and title fees, also capital gains taxes. Those are all types of different transaction costs that a seller may incur during a transaction. So
Yes, sir.
Thank you. Thank you definitely for enlightening and educating us. So last but not least, before we wrap up for today, guys, I just want to make sure that y'all understand that when we talk about closing costs, we want it like once again, we're telling you this so that you can be aware of what they are. But one of the things that we didn't quite touch, I do want to kind of say real quick before we jump off, is we encourage everyone to just make sure that you do your due diligence and compare closing costs with lenders, right? Because all lenders aren't created equal and all loan programs aren't created equal. And so certain loan programs may have higher closing costs than others. Prime example is down payment assistance. You may find higher closing costs with down payment assistance than you would with most traditional financing, like a regular conventional or VA or FHA loan. So just keep that in mind. And so if you're unsure about, or if you're getting the best deal, because everyone's looking for a deal, then make sure you reach out to any one of us on this episode, because we are definitely professionals in our industry, and we're always here to make sure that we're giving you honest and integrity is everything to us, so that we can provide you with the most valuable information that will be key to your situation. So until next time, we ask you guys to definitely send us a message, DM us if you have any questions regarding anything that you want us to talk about on this Teach Me Tuesday. And we hope you guys have a great week.
Stay
Peace
warm out
out.
there.